Welcome to this special episode on Noble TV. Today we'll be looking at the word investment. I know we'll be reminded of words like service, consumption, production, and investment. But in this episode, we'll be looking at the word investment. When we talk about investment, a lot comes to our mind. Questions like, what is investment? How do I invest my money? What do I invest on, and how safe is my investment? These are some of the questions that comes to our mind. We're going to start with the first, which is, what is investment? Investment simply means investing or buying of assets with the aim of any return in the future or an appreciation of value in the future. Remember, you are investing in an asset with the future aim of any return or gains or appreciation. Appreciation simply means increase in value of an asset. That is appreciation. Most times we get involved or we buy some things and think we are buying an asset. We need to understand the difference between an asset and a liability. An asset helps generate income, while liability takes funds from us. It doesn't generate income, so it is not an investment. For example, if you are to buy a bus, for instance, a motor vehicle, for instance, and the purpose of that motor vehicle is for your private use. You're using it to convey yourself or your friends or your family, your private use, without any money from it. It is a liability. But if that vehicle is to be used for commercial purpose, where people pay you transport fare, it's become an asset. So it is an investment. So you can see we are getting the same vehicle, but it is either a liability or an investment. It's better for us to understand what an investment is. The major aim of an investment is that it's going to generate future returns or future income. That's what makes it an investment. So we're going to ask, what are the types of investment? What are the things I can invest my money on? We're going to start with the first, which is investment in stocks. Stock simply means being a part owner of a company. For instance, assuming Cadbury Nigeria is selling its shares now, and you go and buy such share, you are becoming a part owner of Cadbury. You're becoming a part owner of that company, and you are entitled to what is called dividend when the company declares its profit at the end of its financial year. So when you invest in stock, you are buying part of a company, the share or equity. You are owning part of that company. So you are a part owner. That's what stocks mean. Though we have different types of stock or different types of shares or equities, but we don't want to go into those types. We're just looking at the types of investment. Also, we have the bonds, investment in bonds. Investment in bonds are like the shares that makes you a part owner. Investment in bonds makes you a lender. You are lending money to that company. That's why most times you talk about the federal government bond, or you talk about a traded company issuing bonds. So when you buy bonds, you are lending money to that company, and you are entitled to an interest, a principal at maturity. Usually it has a date, a maturity date, where you be entitled to your interest and principal. Though sometimes those bonds can be traded before maturity, and when it's traded before maturity, you sell at a discount. Well, I wouldn't want to go into that, but just know that when you invest in stock, you are what? A part owner of the company. If you invest in bond, you are lending money to the company. We also have investment in mutual funds. Mutual funds simply means you're giving your funds or you're giving your money to a body of investors where they invest on your behalf. It's called mutual funds. They can invest your funds for you either in any of the plethora of investment opportunities that they have. If for mutual funds, you have fund managers. They manage your fund on your behalf. They can decide to invest in anything. Sometimes you reach an agreement with them where there's a specific return that you earn. But for mutual fund, like I said, you have a fund manager that manages your fund on your behalf. Also, you can be a passive fund manager or you can be an active fund manager. These are things you need to understand for mutual funds. Then we have the exchange traded funds. For the exchange traded fund, it is simple. It's just they track market index. They invest for you. They are like the mutual funds, but they track market index and they invest your funds in when they see an opportunity in the market or a reduction in the price of stocks, they can invest. And when the price goes up, they sell. That's what the exchange traded funds is all about, investment in exchange traded funds. Then we have investment in CDs. CD is called certificate of deposits. For CD, certificate of deposit, you give your money to the bank for the bank to either fix for you or they get treasury bill, federal government bills for you, treasury bill. For the CD, certificate of deposit, the risk is lower and also the returns. So it's left for you to decide. You look at the opportunity that you have, how safe your fund is, if you're ready to give it to them for them to fix for you. You can fix for ranging from 1 month, 2 months, 6 months, 1 year, and also for treasury bill, the same thing. You have 3 months, 6 months, and 1 year. You have a specific return that you earn at the end of that transaction. So you have the certificate of deposit, you have the treasury bill. Also, we have annuities. You can invest your money in annuities. Annuities is just like an insurance policy where you invest, you give them your money, they give you the policy, and at the end of a duration, you're entitled to a return. The returns might be coming monthly, might be coming annually, or bi-monthly, depending on your agreement, whoever you are giving the funds to for your annuity. So you see, for the annuities, like an insurance policy that you earn returns at a particular point in time. So we've talked about the stocks, we've talked about bonds, we've talked about mutual funds, we've talked about exchange traded funds, we've talked about annuities, and we've talked about the CD, certificate of deposit. Another investment opportunity that we need to look at is investment in commodities. We can invest in commodity. It is also called trading, where you buy commodities and sell. There are specific commodities that we advise for you to invest in, especially consumables that you know that people can readily get. We call them fast-moving consumer goods. People can easily get. Outside that, you can invest in, say, the metal like gold, silver, others. And also you can invest in petroleum. These are also commodities that you can invest in. We have a lot of them. Soybean, wheat, beans, rice. These are some of the commodities that you can invest in. But when you invest in commodities, you need to take cognizance of a lot of factors. If the commodities are seasonal, you need to take that into consideration so that you don't invest in commodities and at the end of it all, you lose them. But investment in commodity is advised because it's rare for price of commodities to just drop down. You understand? So we'll take that into consideration. We advise people to invest in commodities that they know that easily go in the market. And also we have investment in cryptocurrency. Well, most people for now don't know much about the crypto market, and so it is advised before you invest your money into crypto, you need to understand the market. It's not like a normal currency. These are digital currencies, so it's called cryptocurrency. For now, Bitcoin is the first cryptographic currency that is traded on that platform. So I will encourage you, before you invest in cryptocurrency, you need to check, one, the policy, the laws guiding where you stay, because for us in this part of the world, the CBN has not really given credence to cryptocurrency trading. So these are the things you need to take into consideration if you want to invest in cryptocurrency. And also another investment opportunity I want us to look at is the real estate. Real estate covers not just investing in land, buying land, or buying an estate, or buying a building. Also, getting a farmland is also an investment in real estate. Just like I advise us for the commodity market, it is also important to take this into consideration that investment in real estate is a very profitable one. Remember, provided that property, either the land, the building, or the farmland, or whatever you're investing in, has a good title. Without a good title, possibly you fall prey to fraudsters and you might lose your investment. I will encourage, while you do investment in real estate, you take into cognizance the title document, the title of the property. For title, we have the power of attorney, you have the deed, you have the CFO. These are some of the titles you need to take into cognizance, or government consent. But it's important for you to understand that a CFO gives you an absolute title. These are some of the things we need to take into consideration when we are looking at investment opportunities. There are a lot of plethora of investment opportunities out there. I will enjoy us for now. We're going to stop here. I've talked about some of them. We're going to have a subsequent video where we look at savings, we look at consumption and production. And also in our comment section, you can drop your questions there, questions you want to ask about investment, what you can invest in, or you can any particular area you want to invest in that you need our advice. We're going to give that to you. So I'll encourage you to go through this, take your time. Investment is very, very important. It's very, very important in your day-to-day activity. I didn't talk about the retirement plan. Retirement plan is not seen as an investment option, but then it is also an investment option. But for a retirement plan, you give your funds to people for them to invest for you. They might invest in any of this option and you get your returns either monthly or at the end of your retirement, you get some benefits. These are some of the things we need to take into consideration. So we're going to stop here talking about our investment. Remember, like I talked about, go to the comment section. You can ask any questions you want to ask on investment. I will be there to assist you as much as we can. Subsequently, we'll be looking at savings, consumption, and production. From us at Noble TV, my name is Noble Arinze. Remember to like, share, comment, and subscribe. Thank you.